Today we're going to kind of do a review, overview of the accounting cycle and process, and then just talk about the financial statements. So first of all, I have a few slides here. You can get slides, you can get all kind of free material like check figures, templates. Templates can be helpful when you're doing some of your work. PowerPoints, all kinds of things, flashcards, games. If you go to the publisher's website, the publisher is Cengage, and their website is cengagebrain.com, and then our ISBN number for our book is listed right here. Just click on the free materials tab and access now, and then decide on which chapter you want. Anyhow, just a little hint there. I'm going to put this in the class too, so it's not just going to be here. All right, first of all, let's talk about the accounting cycle, right? The overview of what we've already done. We record our transactions. That was the first thing we did. We posted these journal entries to the ledger, right? The general ledger and the subsidiary ledgers. We did our adjusting entries, and we used all of those, our ledgers, our general ledger, to create our trial balance and then our adjusted trial balance. So we've already done all of this. This is where you should be at this point. Once your adjusted trial balance and is balanced, your debits equal your credits, and especially if you've already done the worksheet that includes the balance sheet and income statement part of it, then you're really ready to start going ahead and creating your financial statements. And this is kind of an easy step. You just have to make sure you put them in the right form. Step 5 says prepare the closing and entries in the post-closing trial balance, but you don't have to do that for this practice set. So, but I didn't want to leave it off because that's what would normally be done, right? You would close everything. So you don't have to do step 5, but that's something that would be done in a regular business. All right. So we talked about the journal entries, right? We had put the date of the entry, the name of the account using our chart of accounts. Our debits and our credits should equal for every journal entry. We talked about all that. And then we would record these into the general ledger. It's called posting, right? After it records the journal entries, they post them to the ledger. Then we create a trial balance, list of all the general ledger balances and their balances in each of those accounts. Make sure that the total debits equals the credits. If they don't agree, then you got to go kind of figure out what it is, right? Now, if you get to the point where you just can't figure it out and you don't know what to do, it happens sometimes. What you really got to do is go back to the beginning, maybe get somebody to look at, look over your shoulder with you, right? And say, okay, well, did you move this over here? It can be a little bit frustrating, but if you make sure you go through each step and make sure you get each step right, then they have to balance, right? If not, I'm not going to take off a lot if your trial balance doesn't balance. If it's between turning in work and not turning in work, turn in something that doesn't balance, you'll get some points taken off, but you need to have some kind of trial balance and financial statements, even if they don't balance in the end, so that you can get some kind of a grade, right? So just keep that in mind. Our adjusting entries, we talked about those, right? At the end of each period, sometimes each month, sometimes each quarter, sometimes each year, our company does adjusting entries. They do their depreciation, they figure out any expenses that have accrued or any kind of deferrals they have. So that's exactly what it says here. Here's an overview of our accounting cycle. Right? We have our source document, for example, a sale. We journalize the sale. We take that journal and we post it to the ledger. We don't have to do T accounts in this particular project, but a lot of times we do T accounts and other exercises. We create our trial balance from our ledger. Then we create our financial statements. close financial statements, and we start all over. So it's a big circle. This is important. So for doing our financial statements, make sure you do your income statement first, because you need to take your net income and then do the statement of changes to stockholders' equity, right? So retained earnings is part of the stockholders' equity. You have to know what the new retained earnings is. So you take your beginning retained earnings plus your net income minus dividends. I don't think there are any dividends in this example. So you take your beginning retained earnings plus your dividends, if there's no plus your net income minus any dividends. If there aren't any, ignore it, and you get your new retained earnings. So you need the new retained earnings to do your balance sheet. Make sure in your balance sheet you use all of your balance sheet accounts, but don't use your old retained earnings, the beginning of the period retained earnings. Use your new retained earnings that you create in your statement of changes in stockholders' equity. So you use your ending retained earnings. That's why you want to do this in order. Income statement first, retained earnings second, balance sheet third. Here's an example of a single step income statement, and you can use this, right? Make sure you have the name of your company, right? This is just an example, so it doesn't, just to show you what it looks like. A single step means that all the income's on the top, all the expenses are below it, and then your net income is below that. I don't like them using net profit here, but I didn't make this example. I prefer net income. Here's an example of a multi-step income statement. In this example, we have your sales and your cost of goods sold, gives you your gross margin. Then you subtract out operating expenses to get total income from operations, right? And then you take out other expenses, right? And then you get down to your net income. So this is just an example of a multi-step. You don't have to do a multi-step for this problem, but I wanted to show you one. And this is kind of blurry, but it's statement of stockholders' equity. You can use this format if you want, or you can use one that you find in the textbook, as long as you make sure you put your company's name, the name of the statement, and the date, and then you follow the this format where you take your beginning balance, add to it. In this case, all we're going to have is net income, and then you don't even have any dividends or anything like that. So all this stuff here is just for an example, but really yours is going to be very simple, because you just have beginning balance plus your net income, and you get your new balance at the end of the period. But this is just an example of what a more complicated one looks like. You can use yours, is going to be a little bit more simple. And then finally you get to your balance sheet. Make sure your total assets equals your total liabilities and shareholders' equity. See at the bottom here, $31,794. Put everything in the right format. Have your company's name, the date, assets going in the right order. Current assets first. Property, plant, and equipment. Liabilities going current liabilities, non-current liabilities, or sometimes called long-term liabilities. Shareholders' equity is next, which in this case we have I don't think there may be, I can't remember if there's stock or not, but if there's stock, you put the stock, and then you put your retained earnings. And then if your trial balance equals, then your balance sheet should equal too. Here's some online resources that you might find useful. In the past, I've had some students say that they really like these resources. One is accountingbasicsforstudents.com, and the one that I've used a lot for students is accountingcoach.com. You don't have to use them, but the nice thing about them is they take the approach from beginning basics and then talk about how things work from a beginning level, from a basic level. And a lot of times when you're a student and you're learning, it's nice to have that simple approach to it, because when we're in our intermediate book, they're taking more of a complex approach to things. You go back and you get that simple view of it, it kind of makes sense. You're able to wrap your brain around the situation, and then you can go back into more complicated discussions after that.